Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, president of Universal Accounting Center, and each and every week we have on the show experts, guests, to share with us their insights as it relates to building the premier accounting firm, offering quality accounting services, and getting paid what we're worth. It's here that we actually dive into the various things that we need to consider as we're running and building our businesses. So each and every week I have on a guest, and today is going to be a repeat guest. This is David Saphir. He's someone I've known for a number of years and recently just spoke at our conference, GrowCon. Excited to have you back, David. Tell us a little bit about you.
Roger, thanks for having me back.
Yeah.
GrowCon was fantastic.
Thank you.
I know we're going to talk about it a little bit. I am a businessman turned cash flow mentor, guru. People try to throw labels at me.
Those are good.
But at the end of the day, I'm out there trying to teach people how to focus on cash flow as a way to have a healthy business, how to stay out of trouble with your business, and how to really make sure you've got cash available when you need it.
Very well said, because it's a common problem. It's one that I regularly deal with my clients. It's something that I think is principally the reason for many failings in business is even at the accrual level, the business can look great. The business model can be wonderful, but at the cash flow level, if you don't have the money to pay the bills, make payroll, you're in trouble. So this is going to be a great conversation. So as it relates to cash flow, what got you into this? I mean, let's get a little bit of a backstory that you've got that business background, cash flow. I mean, it obviously matters, but why do you?
It's interesting because if you looked at my career where I started out, I started out with huge companies, Morgan Stanley, Kodak, Dell. And these companies, well, Kodak ended up with financial issues, but they don't worry about cash flow per se, at least not at the level I was at. I got to be a general manager. My job was to make a profit.
Yeah.
And once in a while, we had clients that we needed to help with the collection process because as a general manager, I'm responsible for everything. But I didn't have to worry about it. But what I did get to learn about was all the little levers that we could pull to influence margins, influence costs, influence all of the different aspects of the business: marketing, sales, operations, human resources. So now fast forward after I leave corporate and I got a certain amount of reputation. People would say, David, can you come help my company? But they were small businesses. When I'm talking small, we're talking anywhere from hundreds of thousands of dollars in revenue to, let's say, a few $1 million in revenue. And I was doing general work and said, you know what, I want to specialize in something. And I took a step back, and what I realized was everything that they were asking me to help with went back to one issue.
Okay.
Cash flow. Sales, I need help with sales. Great, let me help you out. Marketing, let me help you out. Product management, no problem. And I said, all right, let me see if what's available in the marketplace to help people with cash flow. And at that point in time, at least, I did as much research as I could possibly do. And what I found was a bunch of articles. 7 things that you need to do today to manage your cash flow, and 12 things that you can do to increase your cash flow. And what I noticed is that there was the same dozen or so trite. In my mind, they're very trite, and we can talk about why. Strategies that were repeated over and over and over again, except for one strategy was always new and different. And what was that strategy? It was the last one in the article that said, don't worry about it. Buy my product, buy my service, and all your cash flow problems will be solved.
If it could only be so easy.
There's no such thing as a magic bullet, right? That's one of the myths I talked about at the conference. And so I said, wait a minute, that's ridiculous. I could probably think of 99 different ways to impact cash flow. Why? Because I had all these strategies under my belt that impacted profit. That is a direct impact eventually on cash flow. So you already mentioned it's not the same. Accrual accounting or even cash basis accounting, way different. And so I said, all right, 99 ways. Let me see if I can really think of that many. And I got to 99 and just kept going and going. And I'm now up to 215 different strategies to impact your cash flow. And that's how this whole thing was born.
I love this. First of all, the fact that you've gone as deep as you have into something that I think is so relevant to business owners. Now, I'm going to go from an accounting perspective. Accounting, we talk about the balance sheet, the P&L, the income statement, but also this cash flow report. And we think it begins and ends there. Here's this cash flow statement. Do I have more money than I started with over this period of time, over the month, over the quarter, over the year to date? And we're just looking at it to see, okay, is cash at least building up? But that may not address some of the growth needs that we have. It may not address some of the financial obligations that we have. So the question I want to ask is, are there myths associated to cash flow?
Oh, there's tons. I mean, I identified a dozen for the conference, but after I submitted my formal presentation,
yes,
I wrote down at least 2 or 3 more, and I'm not even trying. There are, and one of the things about cash flow is it's a myth if you think you can manage your cash flow on a quarterly basis or on a monthly basis. Why? Because how many companies get paid once a month and then spend all of their money the day after they get paid? So if you really want to manage your cash flow once a month, figure out a way to make that happen. Most companies, it's a weekly revenue or daily revenue and weekly expenses. And what you find is within a month's period that you've got these huge gaps where revenue is low and expenses are high. I'll give you an example. I'm helping sell a business. And we did projections for the new owner, and it was great. It was like, make $5,000 this week, and then you lose $300, no big deal, right? A few $100s.
Yeah.
But then 13 weeks out, it was like, wait a minute, there's a $7,000 loss that week.
Yeah.
What happened? Well, what happened is harmonics. You're jumping on a trampoline, and you both hit with a partner, and you both hit the bottom at the same time, and it just rebounds you high.
Yeah.
It's the same thing with cash flow. Harmonics, in this case, he had the payment due for the business the same week that payroll was due. And so it took 13 weeks. It was a 13-week cash flow model. That 13th week is the first time it hit. And it was like, good, that's what you need to be looking for. You need to accumulate cash to be able to hit the soft spot.
I've got 2 stories related to this. As you're sharing this, I'm remembering a client a number of years ago. They were very emotional about the cash flow as it related to the business. A lot of highs, like you were mentioning, big monies would come in. So there were the high highs with the bank account showing a large sum of money in there. And then there were these low lows where they were just like, oh my heavens, what am I doing? I need a line of credit. Got to put it on my credit card. I mean, it was just a variety of things. And I basically came in and short story, they really just needed to plan or manage the monies coming in and going out. They needed to get on top of their payables and receivables as it was the dates. And what the whole goal was is, one, let's manage how much you're paying or when you're paying the payables. Don't pay them once a month. Let's pay them 3 or 4 times a month. And that way the dips didn't get as deep. We were able to take the vendors and kind of negotiate with them, call them and say, hey, can I change my due dates to this and that? And by doing so, we were able to work around such things as payroll or when the rent was due. All these larger expenses, we moved the smaller ones around them so that they didn't hit at the same time. It wasn't this compounding thing that all of a sudden felt overwhelming because it was an emotional experience. And so by doing this for the client, we were able to take their payments and kind of accelerate them or move them around. We were able to take their payables and move those around. And now instead of having high highs and low lows, it was more of a cadence throughout the month of just money in the bank. And there became this new kind of a fictitious zero that they then began managing the business by, that if they went below this particular threshold, then they got concerned or worried. But as long as we kept above that margin, that was fine. And they found that running the business didn't have that emotional roller coaster experience. Great experience. Second one is I'm dealing with a client currently wherein they're dealing with a lot of financial strain and they needed to find cash. And I'm sure this is one of your methods, but essentially I said you need to proactively go out and with your years in business, find out from your vendors who you can work with to maybe change your terms from 30s to net 45s. Is there anybody that can maybe give you a reprieve of this week to maybe paying in a week or two? And let's try and manage or push in some instances some of the payments so that we didn't have to draw into the line of credit and so forth. Now they didn't have to take the monies that they did get from their second mortgage and use it as often in the business as they thought they might. And again, it was this emotional journey for the business because they were proactively reaching out to the vendors, and rather than defaulting or being late on payments, they were able to manage some of these situations to their favor. Any thoughts on that?
I do have a thought. Yes, that is one of the strategies. Work with your vendors, get better terms. And if your current vendors won't give you better terms, go find another vendor who might.
Yes.
But let me tell you, one of the myths is that it's in your control. In that particular case, great strategy. What's the control that your client has? Their control is being able to reach out to the vendors. But who makes the ultimate decision?
The vendor.
The vendor. So let me give you an alternate strategy, which relates to the first one that they would be in control with.
Okay.
And that is because even in the first one, they reached out to vendors. They could do an artificial zeroing out of that bank account by setting up a second one, which is a reserve account, which is highly recommended whether you're paying taxes, sales tax. That's probably something you've seen before, right?
Yeah.
Somebody falls behind on sales tax, and it's because they're just mixing funds.
Yes.
But, right? So I've got this philosophy: have as few bank accounts as possible, but as many as you need. And so sales tax, that's one I'd say, yeah, set it up. Unless you've got a lot of cash and you can do it some other way, but set up the separate bank account. And if you're making a mortgage payment that's on your building, let's say it's $10,000 a month, set aside $2,500 a week and into your bank account. And it creates that zeroing out of your main checking account, so you're playing mental gymnastics with yourself. Now, some people can't deal with it, right? They're saying, wait a minute, I've still got the $10,000, I'll just go buy something, and they end up in the same problem.
Yep.
But at least you've got control over that, being able to try it if you can't get your vendor to cooperate with you and say, sure, we'll take 4 payments a month to pay your mortgage without penalizing you in some way, shape, or form.
Yeah. Well, one, I like that strategy simply because, one, I've done it, but two, it's that bite-sized principle. It's the fact that instead of the $10,000 payment, it's $2,500 payments each week. Those are a lot more manageable. You don't see that high and low as you pay off that $10,000. And then the other thing that you're suggesting about the bank accounts, highly recommend it. What you're doing is you're removing the temptation of the business owner to see, I've got $30,000, $100,000, $300,000 in the bank, and recognize, no, I've got monies that are going to be paying quarterlies. I've got monies that are going to sales tax. No, I've got monies that are needing to go here. You've got other responsibilities that perhaps are being overlooked. And too often the business owner gets excited about various things that they can and perhaps should be doing in the business, but the monies aren't exactly as they appear because they have other obligations that haven't been met yet. So I love this conversation. So do you have another myth that you can share?
Oh, well, how about cash is king?
I like that one, though. Don't take that one away from me.
No, but the myth is that people actually treat cash like king.
Oh, okay. All right.
All right. I agree. Cash really is king, but most people, most business owners but I love accountants. They're great. But even the accounting profession, and this is probably what then it's a trickle-down effect to business owners, treat cash as a second-class citizen. How do we know that? Because what's king it's what's your P&L? What does your profit look like? That is generally is king. And it's also the media. The media in general, when you hear about quarterly earnings reports came out, what is it? A quarterly earnings report. It's not a quarterly balance sheet report. Certainly not a quarterly cash report. It's quarterly earnings. And so people focus on there. Second is the balance sheet. What's the strength of the balance sheet? So Tesla, big news about a month ago. They lost a bunch of money and revenue was down as well. Okay. But what they didn't say in the news, I had to go into the original press release or some article. It was 2-3 pages long, the second to last paragraph. They lost $5 billion in cash that same quarter. Now they're sitting on $50 billion. Where you go, okay, Dave, it's only a tenth. But then if you go, wait a minute, if they have $50 billion and losing $5 billion, they are out of business in 10 quarters. That's 2.5 years from now. Wasn't reported. to me, that's a big deal.
Yeah, and they also owe Elon a good chunk of money. I think it's like 50 billion or 55 billion. So
There's all sorts of other stuff going on, right?
Yeah.
That's not being reported. That might be on the balance sheet, liabilities. So the point is, most people, it's lip service when you say cash is king. And how much time are you spending doing cash flow projections? How much time are you spending doing cash flow management? Let alone cash flow optimization or maximization. And there's a difference between the two, but either one. People don't spend the time and the effort on it that would then say, we treat cash like it's king.
So let's talk about the difference between cash flow management and maximization.
Absolutely. That's a great one. What we've been mostly talking about right now is cash flow management, which is mostly you've set up your model. And then you move to, okay, now that I've got a model, when I know when money's coming in, when it's going out, how do I manipulate it so that the timing is better, so I don't have the big dips and the big gains?
Yes.
Okay, so great, management. So how do you make the leap into maximization? First of all, here's another myth, in addition to not being in your control, that so many of the common cash flow strategies actually are cash flow negative strategies, not cash flow positive. But cash flow is the difference between your beginning balance at one point in time and a different point in time. And so when you hear about a cash flow strategy like increase your cash flow, give a discount so your clients pay you early.
Oh, yes. Very familiar with this.
Right?
It's a prepaid benefit.
But who's paying for that benefit?
You are.
So short term, yes, it's a great strategy. So if you're suffering and you're going, okay, I need money in the bank today, it is worth it to pay the 2%, 5%, 10% or more to get the cash in the bank. But it is not increasing your cash flow when you look at it from a quarterly or an annualized basis. You're actually shooting yourself in the foot. And if you combine that with, okay, you're doing a discount for accounts receivable. Let's see, you're letting them pay by credit card. So then the
merchant fee.
The merchant fee is another 3%. So that's compounded. You're getting 90% and a 3% discount off of that. That's another, now you're down to 87%. So you've lost, let's round it off, 15% of the revenue. Well, what's one of the most common strategies? Sell more. Put your stuff on sale. Well, if you've already sold it on sale, 80% off, and then you're giving them a 10% discount to pay early, now you're down to 72%. And then you're saying, okay, but I'll pay for the merchant fees. You're down to 70%. So you're going from 100% of your revenue down to 70% because you're implementing all of these cash flow quick strategies that focus on short term, but long term you're killing your business if you keep doing that over and over again.
So I'm not going to disagree with you because I understand what you're saying, but I am going to temper what you're saying with the fact that there is, on the finance side, the risk that you're running that they're going to default.
Absolutely.
And so you have to know also at the same time at what level are you willing to risk a default, because you are hopefully earning interest. If you're extending them credit, hopefully you're acquiring interest on the monies that you lent them. So let's say you sell it for 100%, okay, and you're going to earn interest. Rather than them taking advantage of the painful discount, they're paying interest on the financed amount, and their potential of defaulting could outweigh that pay in full. So there is a balance here that's going on.
Absolutely.
But your point is accurate. You've got to assess, am I willing to actually take that pay in full discount and eat it because I'm the one now not making the revenue, or am I willing to give them that line of credit that perhaps they deserve or don't, but all of a sudden I'm running the risk over 12 months, 24 months, 36 months, they're defaulting, and in the end, I'm not getting any of it. And I'm not getting the 70, I'm getting 40%.
Absolutely. And I'm not saying not to use it, but that brings up another myth.
Okay.
That one size fits all.
Yeah.
Right? There's no qualifications usually in these articles that I was reading. If your situation is this applies to you.
Yeah.
So you have to understand your needs today. And if today you need that cash absolutely do what you need to do to get it in. But longer term, you can actually flip it upside down. And like you said, if you've got clients with good credit, say, I'll give you 90-day terms. I'm just asking you to pay 2% a month.
Yes. Yes.
Right. And so, or there's another one that's get paid quick. Right. That's the basic fundamentally. That is the attitude. Always get paid as quickly as you can. But how many Ginsu knives, and I'm dating myself a little bit.
Oh, no, I get the Ginsu knives. We're good.
The infomercials of yesterday,
yes.
but you still see it today of, it's $99 or 3 low installment payments of $35 each, which adds up to $115. And you go, a lot of people say, great, I don't have $99 today, but I can easily make $35 payments.
Yeah.
And the guys who sell the knives, now the other thing is that those are very high margin products. So if for some reason they default, probably that first payment before they ship covers all the costs. And so there's very low risk from you end up in a deficit.
Yes.
But there is I've lost track of which myth we're talking about, but it's different circumstances, right? It's not one size fit all.
Yes, that's what you were making the point of. Is every business is unique. Every business model has different strategies that it can lever.
Exactly, and that's where the wisdom comes in. So many people want to go, tell me the best, and I think you did this on our last podcast. Tell me, 3 or 5 strategies that are great, and it's like, oh man. And I don't want to have the discussion about, well, it all depends.
Yeah.
So I'm actually right now going through and saying, okay, which ones of these 215 every company could use, like a reserve account. There's one.
Yes.
So, oh man, I've lost track.
No. Here, let me make this comment.
Yeah.
One of the things that's I think interesting in these conversations, as it relates to cash flow, is the difference between the bank account, what's in the bank, and receivables, what is owed.
Yeah.
And so cash is king in the sense of which would you rather have, money's owed to you or money in the bank. Well, the value today with the interest rates is many people are able to leverage that money in the bank account with an interest rate. Now you're earning interest versus someone owing you interest. Yeah. And if I can manage this and with the receivables mitigate the write-offs, there's a lot going on here, and it is a case-by-case basis because many businesses don't even have receivables. It's a product, they sell it, and it walks out the door, and they got paid. So, there's various situations that you need to consider with whatever client or service you're working with. And so the point is you've got 215 strategies, each of which can be considered, and I think it's the role of the accounting professional to say, okay, first of all, which one is in our control? That's how we started the conversation. Which do we have control over? The second is then, which is going to then give us the most urgent, immediate gain? Which one's going to help us the most in the situation we have? Now, from an accounting perspective, if I'm working with a CEO, they may not be interested so much in the money in the bank because on the balance sheet, the value of the receivable is just as great. It's an asset. Yep. And so if I can actually get far more in receivables, I might be able to justify the growth of the company simply because of the fact that the current assets have gone up dramatically. Nobody's asking if it's in the bank. Everyone sees that it's, they may see that it's in the receivables, but unless we've got a write-off issue, I'm winning the game.
Probably.
Give me the probably back.
The probably, you've got to assume that those are good receivables.
Oh, yes, of course. Of course. Yes,
so that's the probably. You mentioned about everybody assumes that you're doing great. A couple quick stories. One is I learned this with stock options. When I worked at these public companies, I got options, and there was this joke about the spouse who doesn't have stock options but who has to manage the budget pulling up a plate and they and it's empty, and the one who's working says, well, what's going on? She says, we're having equity for dinner.
Yes.
I know, and it's the same thing with receivables, possibly, right? Or profit accrual based or accounting based profit. You
can't take it to the bank.
You can't eat it.
Yeah, you can't eat it.
So
The word I've used in my household is opportunity. My wife always came back and said, I don't want to hear about this opportunity. Well, honey, I've got this great opportunity. There's so much potential. She's like, I can't eat it.
Right.
It doesn't feed the
can't
family.
Buy a new car with the way you can pay, or pay the mechanic.
That's right. No,
Yeah.
but there's opportunity. It doesn't
Yeah.
matter. At the end of the day, some of these things are really what we're needing to feed our families. So I like how you're going with this.
So the other one is I am stunned by the banking industry, because the banking industry demands accrual-based projections. And so I was working with a client who was trying to get a loan, and I'm going, there's no way these folks are getting a loan. And the CFO said, David, I need help putting together a projection. They just weren't good at that particular. There's different types of CFOs. This CFO is more of an operational CFO. Okay. So I said, great, let's put together projections. And we've been doing cash flow modeling. And I did it on a cash flow basis. Terrible. It was submitted to the bank. And the bank said, no, we need accrual-based projections. So it's like, that's fine. Not my problem.
Oh, yeah.
This is a bank. They know what they're doing. We did the accrual-based projections, and the difference was night and day.
Oh, of
Anybody
course.
would have given the loan.
Yes.
They got the loan. 2 months later, they defaulted because it happened exactly the way we said in the cash basis. They had too many outstanding debts. They had to spend the money, and they didn't fix their fundamental problems, that the cash was a Band-Aid. And we're not talking $100,000. We're talking $1 million plus. It might have been $2 million.
Yeah.
And it's just relative. It doesn't matter if or it could have been $20 million. If the company's big enough to get a $20 million loan, it means they're also big enough to have a $20 million problem.
Yes.
On the back end. So it's shocking.
Yeah. Well, I'm dealing with a client right now that's having a similar issue. They have a great growth opportunity. They are investing heavily in what it is they're doing, and that investment's causing them to get all these loans. But the problem is the loans that they're getting, many of them require payments before the machinery's arrived. So they're paying large sums of money on an asset that they don't even have access to use, and they're paying for it for 4, 5, 6 months before they can actually start utilizing it to turn the profit. So it's gobbling up cash.
Yep.
And the hope is there's no delay in their being able to utilize it, because if they burn through the cash before they can turn the machine on, they might actually be in a pickle. And it's not that the business model is bad. It's the fact that all these eggs weren't put in a row, and they're just going to hatch it at the wrong time. And so that's the pickle that we're in. They got a great business model, looks wonderful, but the lending that they ended up getting just wasn't conducive to the situation. And I don't think they understood or realized when the payments were necessary. In some instances, I believe they were aware or thought that they were going to be paying only once the merchandise was turned on. And that wasn't the case. It was for us to actually create the merchandise and send it to you, the machinery, you're going to start paying today. So yeah, you're describing some very real world situations that I think a lot of our clients may experience. And we need to be aware of how this plays out in the short and long term. So this is a great conversation. Here's what I'd like to do.
Yeah.
Regarding cash flow, one of the things that I think is amiss is accounting professionals are oftentimes assumed to be cash flow experts. We produce that cash flow report. We're the one providing it to them. And so as the client comes to us, they may be asking, because of these emotional concerns and such that they have, what can I do? And in many instances, they're a great bookkeeper, they're a great tax preparer, but they're not the cash flow expert.
Right.
What are some words of advice you would have to the accounting professional that sees the client needing help? What can we do to help the accounting profession so that they actually get the support they're needing?
Well, there's a few things. The biggest thing that any accounting professional who's listening to this, and it's a bookkeeper, anywhere from a bookkeeper to an accountant to an accredited CPA or chartered accountant,
yes.
right? The entire breadth, they can, number one, start with their mindset that accounting is not an end all, right? That's where it starts. And recognize what you just said, that it goes beyond. Now, one of the challenges with the accounting profession, and I took accounting courses, it's all historical based. It's so focused on the past. Finance focuses on the future. And so to say, okay, recognize the fact that if you don't have the skills, go out and get more skills to be able to look forward. And I just mentioned the first skill. I mean, when I work with professionals, I've got a 5-step model. First is mindset, and that keeps developing. Second one is how do you model? And that's simply putting on a spreadsheet in its simplest form, when is money projected to come in and when is it projected to go out? That is modeling, and I would do it on a weekly basis. Now, that's another thing that it's a mindset shift, because how frequently do we do accounting? We do it on a monthly basis. Quarterly reports. Why weekly? Because at first, unless you've got a lot of cash, then you can spread it out. But most companies, especially if you see a client in trouble, they need help week to week because of the things we've already discussed. I won't repeat it. So once you've modeled it, then you learn how to manage it. What you and I have talked about mostly pertains to managing cash flow. But then there's a third part, which is it is not just the financial department, accounting and finance. So I call that mentoring, is going around and working with other people, parts of the company, and saying, sales, you've got an impact on cash flow. This is how. Production, that was a production issue, what you just described. You have an impact on cash flow. This is how. They're just worried about their getting machine up and running. They probably also didn't realize because they're in production. And then, sales, operations, human resources, marketing, all these different parts of the business have impacts, and there's different strategies that they can each employ to help with cash flow. And then finally, you go to that maximization, which is, okay, which ones of the strategies don't cost you money, but they make you money?
Yes.
And the way you look at the cash flow, is it short-term gain or long-term gain in cash flow, or both, right? Some are both. But some, no, it's short-term reduction. When you say, pay me over 3 months, that's a short-term reduction in cash flow, but long-term, you're better off. So that's where the maximization comes into play. And so these are the types of things that an accounting professional would want to learn.
So I'm going to add to that a few things because I'm liking what you're sharing. First of all, I'm going to go to the emotional side of things. Every business owner runs their business their way. And my point in saying this is, as it relates to cash, everyone has emotions tied around cash, different feelings. And one of the things that I have found is there's a tolerance that some have for debt and some have for, like how much to leverage various things in the company. You may have access to a line of credit, but are you using the line of credit? Do you need it to run the business? Well, there's a safety in saying you have a line of credit, but are you needing to run the business always accessing the line of credit? Well, I would argue, well, maybe you've got a problem with your business model if you're needing to always leverage debt and, more importantly, pay interest. Why don't you run a business that's a little bit more profitable? And so let's look at the business model. So there's a lot more aggressive individuals, clients that I've worked with, where they're willing to leverage everything in the hopes of in 3-5 years this huge win. But there's others that have this cadence of, no, I'm going to run a business model that is a golden goose, and it's continually producing profitable products and such. So the first is that emotional thing. The second, and I loved how you were saying the modeling, because I really believe in pro formas and forecasting and budgeting. The whole idea of playing with the numbers and seeing, if I change this, how does it impact another? And getting really deep into the business model. If we grow this side of the business, sell more of this, what happens to the COGS? What happens to payroll? What happens to our needs as it's related to we grow this side of the company? And you get to play with this. And as the business owner is involved, they're able to see, okay, this is where I'd like to take the business. Well, as the accounting professional, I get to be involved in that journey. And the part that is related to all this is obviously cash flow. And the challenge that you have is how accurate was the forecasting? Were you off by 5%? Were you off by 10%? Were you caught off guard and totally missed something that you thought was a fixed asset and it's a variable asset, and oh my heavens, it just broke the model because you sold so much more and that variable just went through the roof and you didn't account for it? These are things that I enjoy doing because it's the creative side of the accounting that, honestly, it's a skill that you can develop that's not traditionally in the accounting space. Forecasting is something that you can really go deep into, and it has its space or its place, especially when you're working with businesses like you were describing that need to get loans. The bank's coming saying, tell us what you're talking about. We don't understand. And there's one language they're willing to communicate in. It's the language of accounting. And so if you can put in a financial report, accrual, cash, something that they're able to run through their system, because they're not accountants. No. If they can just run it through the system and go, okay, this we can actually get funded, okay? That's where I think it's powerful. But then it's that next level, the maximization. I'm a big advocate of having cash reserves. There's always going to be rocky roads or opportunities that present themselves, and you need the cash. I just missed an opportunity as it related to business because I didn't have access to enough cash, and the cash that I needed to get lent couldn't come quick enough. And so the opportunity is going to pass me by. Well, that's because if I would have had money in the bank sufficient enough, I could have perhaps taken advantage of an opportunity. I mean, that's what we're looking at here, but that's that maximizing. Ultimately, at the end of the day, I don't want to be paying interest. I want to be earning interest. I want to be investing that money into something that's set aside so that I can run my business profitably. How are you feeling about this? Does this make sense?
Oh, all of it does. You know, I automatically end up putting these things into my model.
Of course.
You're describing mindset and mentoring.
Yes.
When you talk about the emotional aspect, absolutely. And a lot of times clients come to me either just desperate, and so here's part of the challenge. By the time they're in trouble, it's almost impossible for them to dig themselves out because they're making worse and worse decisions. And I do the same thing with certain things in my life. It's like, I need somebody else. I cannot look objectively at these issues. And so that's where some of the mentoring comes into play. And maybe that comes first in certain cases, right?
Yeah.
Because you got to say, no, we need to do these other steps. All of the things you said are absolutely true. And it made me think of a book I'm reading right now called The Psychology of Money. And it talks about not just how to make money, but how to keep it, which is, you were just describing let's have a goose that lays golden eggs, have reserves. And part of the premise of the book, I'm only partway into it, is your biggest risk at not accumulating funds is losing money, because that loss cannot be made up. And they specifically talked about cash reserves earning 5% a year. You say, no, that's not what it really does. That 5% a year is multiplied the first time something goes wrong and you've got the cash to deal with it.
Yes.
And not pay the penalty. That 5% a year is worth a lot more the first time you have an opportunity and you can take advantage of it. So reserves, to think about it differently, instead of money that's just not being used.
Oh, yes.
To look at it as, okay, here's my safety net and opportunity fund.
I like those two words. Those are very good, because at the end of the day, I sleep better because I know that gotcha that's inevitably going to come around the corner. I can maybe endure it because I've been smart and set aside something. But the same is with the opportunity. When that opportunity that I don't see around the corner presents itself, I might be able to take advantage of it. I want that reserve, and I want it to be making interest. It's the simplest of statements. You're either paying it or you're earning it, and I'd like to be earning it. So I don't want to be on the side where I'm fully leveraged. And there's a lot of people that live that way, and they grow their businesses that way and become hugely successful. But too often, I think that's the narrative of I was a millionaire and I lost it all, and I became a millionaire and I lost it all. That's not the story I want to lead. I want to be the one that's compounding, and that's my journey. Not that one's better than another. Some people have a knack for it and a tolerance for it, and more power to them. And perhaps they're putting it all on black and they're going to win it all, and more, they're going to have a better life than me. I don't know, but I like the life I'm leading, and I enjoy the relationships I have with my clients, and I think it's a safer, more long-term play, and that's what I enjoy. So that's how I play it.
I agree 100%. And that's another principle in this book, is having enough. Not that you don't want more, but saying you're not going to risk everything. That say, this is great. It's the people who say, I always need more, and faster and faster and faster. Apparently there's been studies done that those are the people who have boom and bust cycles.
Yes. That's what I'm referring to.
Yeah, absolutely. And the other thing I need to talk about, because I've thought about it a couple times, and so I should bring it up, and that is if you have a hard time, we were talking about having reserves.
Yeah. Sometimes
it's hard because you see a total cash amount in your bank. You go in online, and you go, oh, look, I've got $100,000. And it's hard to say, okay, but 10,000 of it is in my checking account that I can spend, and 90,000 is another. The other thing that happens is oftentimes the commercial banks pay ridiculously low amounts of interest. So this one strategy can cover two things,
Please.
and that is have an external bank account. Because there's online banks, there's other really legitimate banks, we're not talking speculative, that'll pay 5% interest, but get it out of your primary checking account. So when you log in, you go, oh, I've only got $10,000. Yeah, but you know in the back of your mind, you've got $90,000 over in this other bank account that's earning 5%.
Yes, yes. You might be familiar with this. Mike Michalowicz addresses this in Profit First. He's trying to say you've got to remove yourself from those funds.
Yes.
And he has his 5 bank accounts. And I think what we're talking about here is so critical because there are individuals who, if they have it, they'll spend it. And what we're trying to do as we work with them is remove that temptation.
Right.
Yeah. So I really love what you're describing.
And we're visual people. I've got a brother who talks about health. And he said one of the issues is people leave candy on their desk. It's only a matter of time till you eat the candy. Self-control has nothing to do with it.
Huh.
And it's the same thing with money. If you visually see it, and that's not you will eventually spend the money. The whole thing just can get blown up. Put it out of sight, out of mind.
Yeah, it would mitigate a lot of the stories I'm experiencing where the people are owing taxes and they just didn't realize that, quarterlies come so quick, but they're the ones that you just maybe don't think about, and you believe the monies you have are yours, and they're not yours. Uncle Sam is entitled to them. So let me kind of transition a little bit of this. As you've gone through this journey of coming out of the corporate world into working with businesses, addressing cash flow, how have you seen people's lives impacted from this when they finally are able to get on top of cash and understand it and maybe have different emotional relationships with it?
It goes from not being able to sleep at night because they might lose the family business, with stress on the family relationship, to being happy again and remembering why they got into the business in the first place. To quote Michael Gerber from the E-Myth,
yes,
most of these business owners I work with, and probably who you work with, are technicians with an entrepreneurial itch. And they've never gotten past fixing small engines or designing plastic parts, which they're brilliant at, to running a business. And it's stressful. And I look at it as a multiplier effect. If one business goes out of business and they have a family, let's just call it a family of 4. It's, whether it's 3 kids or a spouse and 2 kids, that's one. But you've also got, let's say, 5 employees who each have a family of 3. We're up to 15, that's 20 or so. But it goes beyond that. It goes to the vendors who lose a large amount of money. And it goes to the clients. Your clients have problems, right? If you are running a business that your clients have a great relationship with you, imagine how devastated they will be if all of a sudden they can't get your product or service. It's this huge trickle-down effect. And when you think about the number of businesses just in the United States going out of business every single year, we're talking about millions and millions, or probably tens of millions of lives impacted very negatively.
Yes.
And so on the personal side, most of the business owners I end up working with end up becoming friends because they like me, they trust me, and they literally thank me for saving their business and helping them sleep again at night.
Very well said. No, that's true. I've got a similar story, just one of many. My brother happens to run a family business. Initially, it was him running the business, my father helping, and it was the 2 of them, and it eventually grew. Well, at this point, he now has not only himself that he's running the business with, but he's got now his son. His son's married. He has children, his grandchildren. He's got another family member that's in the business. They have children, so grandchildren. And so just as you were describing it, it's exactly what he's experiencing. He's realizing that if he chose, I think I can relax a little bit with my business. My needs are met. I'm happy. I'm full. So I'm not going to really be ambitious. I'm going to take a month off or kind of slow down. Any of those things impact his children, his grandchildren, to the extent that he's not able to relax. He's always in this hustle mindset because it's not just him he's feeding, it's his grandchildren he's feeding, and he realizes that. But you're right to take it beyond that. It's the vendors. There's people that, based on his business success, supply him with the tools and the resources he needs. Well, if he goes out of business or if he slows down, takes off time, they're impacted because obviously they're not getting the sales that they would want. Their customers, the quality of the work that they're providing, that's no longer going out into the community. People are delayed as to how they're going to get what their needs are. So you're right. There's this ripple effect, and the business owner is struggling. The more and more that they learn and understand this, the more and more weight comes on them. And as that weight comes on them, from a cash flow perspective, we're at least addressing this to mitigate that frustration, that concern, because we're giving them a relief valve.
A relief valve, and they can start enjoying themselves again. And the more they realize it, the more pressure they have. And that's where sometimes bad decisions end up being made.
Yeah, rash ones.
Right. I put out a public service announcement whenever I can: stay away from MCA loans. And if you don't know what it is, then just put it out of your mind. And don't go there. But put in the back of your mind, if you ever hear of an MCA loan, run away.
Run away. Okay. I want to ask you about conferences. Obviously, you came, spoke at ours, GrowCon. Yes. You did a phenomenal job. Excellent topic. I'm just curious, overall, what is your opinion of conferences? What are your thoughts as it relates to people as a profession going to a conference, meeting in person, hearing from experts? What are your thoughts?
So I have a few thoughts. I just talked about this to the group. We talked about GrowCon in my mastermind.
Oh, very nice.
And I mentioned that there was people who had the option of coming virtually. And one of the people in the mastermind said, "Oh, yeah, that's what I would do." And I said, "You know what? But let's think about it. Would you actually take 2 days off, sitting at your desk without interruptions, without email, without if kids or spouses, all sorts of life?"
Yes.
And when I reviewed it like that, said, "Oh, no, you're right. There's no way I could ever do that." So in-person conferences, and I'm talking about even if you live in the same city, go to the hotel, because what do I get out of them and what do I see other people getting out of it is a few things. Number one, it gets you excited again for your profession. Or I imagine certain people, it goes, okay, it's convinced me I got to get out of the profession. But either way, you're going to get excited, or it's going to impact your life in that way. Mm-hmm. Number two, professionals. Now, you might be going and saying, "Oh, I want that speaker and that speaker. I'll live through these other ones." I sat through every conference session at GrowCon.
Yes.
And it was the speakers that I wasn't expecting is where I really got some golden nuggets. Mm. It wasn't necessarily the technical stuff. There's a big variety of how to help influence your business and grow your business. Great people who are examples of where I might want to be in a certain part of my business. So you get to learn, and you get to meet people. You get to meet people who are like you, that you go, okay, I want to be like them. You get to meet people who are in juxtapositions that there might be partnerships with, or somehow or another help each other.
Yeah,
and you
collaboration.
get to collaborations, thank you. And you might meet people who are the exact opposite you, and you can either say, I never want to be like them, or it could be a opposite attracts. Either way, you meet people you'd never meet otherwise, because in normal networking circles, we're generally attracted to people who are like us.
Yes.
And so there's actually more value out of me meeting people who are not like us.
Yes.
And that's one of the things you get out of a conference.
I appreciate you highlighting those things, because virtually it's so different than being in person. I find value, listening to music on Spotify, and yes, I can enjoy it. And you can even listen to the live concerts that are recorded that way. But there's something to be said about attending something physically with a group of people and the energy that's there. That energy doesn't translate into the audio. And from the home, yes, you're multitasking. Admit it. You're doing the emails. You're quasi listening. But there's things that happen both before the presentation and after the conversation as you speak with people at your table or near you. There's relationships that you build at lunch, during the after conference events. There's just things that are taking place throughout the event that aren't the speaker that you're going to benefit from. And as you were describing the peer interaction, you're going to be inspired by some of those that are doing better than you, It's going to say, you know what, they're doing it. I just met them, and they looked like me. They put their pants on the same way. So at the end of the day, I'm inspired because I can see, my heaven's sakes, I just talked to somebody that's doing so much better than me. I can do this. But you're also an inspiration to others who are following, that are behind you, in the sense that they're going to look up to you, and you're able to give someone insights on what you can do to help them because of the experiences you've had. Hopefully you're actually in the middle, inspired by some and helping others. And that whole experience at the conference, it's all contingent upon you getting away from your business, the distractions that are there, and stepping aside, removing yourself from those distractions. Your mind will actually find, insights, perspectives that you don't have sitting at your desk. You're going to have epiphanies there at the conference that address various issues that you're experiencing, all because of the fact that you removed yourself from the day-to-day operations. Highly recommend conferences, very much.
Let me give you two other insights. One is, there's this concept. Dan Sullivan has a book out, 10x is easier than 2x, and that's my book for the year. I read other books, but I'm studying this one. And he says everybody needs to take time out to refresh and grow. And this is one of the things. And if the best performing athletes, think about American football players, they don't play for even 60 minutes because they're playing offense or defense.
Yes.
They play for 15 minutes or maybe half an hour, but they spend the rest of the week during the season refreshing and recovering. That's the term. Mm-hmm. And so everybody needs to be able to recover. A conference gives you a chance to recover and get out of it. And yours was right after tax season, all that much better, right? So that was number one. Number two is vendors. This was one of the surprises I had.
Oh, yes.
I make great contacts with vendors. Now, one of them is a software company. I know the CEO. We've met before, and so I was able to reconnect with him. It was great. But the other ones, there's at least three other vendors that I am talking to with ongoing relationships.
Nice.
Yeah, it's great. Matter of fact, I've got one today that I'm going to be talking to. And nobody at these conferences is trying to do a hard sell.
Yes.
They're just trying to get exposure and saying, okay, you're one of 100 or 1,000 people, and they just know it's a numbers game, and so they're not trying to sell you anything. They're just trying to develop relationships. Great place to meet vendors.
I am so grateful you brought up vendors because I couldn't speak highly enough of them. They play a critical role in the success of the event, but more importantly for the attendee, it gives you a chance to actually learn what's going on in your profession. Mm-hmm. Honestly, you're in a vacuum when you're at home working, when you're at the office working, when you're in your area working. Why? Because you're actually doing the work. But when you can step out and go to the vendor part of a conference and see who's there to service the community, who's there to help the profession, who's there with some new resource, tool, strategy that you're able to say, you know what, that actually would apply. And what's fascinating is they might have been at the conference last year, and at the time you were like, it doesn't apply to me. This year, you've got a situation internally or a client you're working with, and you're thinking to yourself, this is exactly what I need. You don't have it because last year you didn't need it, but now it's totally relevant. And if you didn't go, you wouldn't know. And so all of a sudden, you're in a situation where you're going back to your client saying, hey, I'm a professional. I invested in my profession. I learned of something new that I can now bring to you and help you. That's huge because you've got their back. They didn't go to the conference, and they wouldn't have gone to the conference. But yet here you are coming back to them saying, hey, in my professional process of keeping my skills where they ought to be, I was in a position where I learned something from a vendor that now is a cutting-edge product, resource, tool that I can now utilize with you. That's phenomenal because now you're that much more valuable to your client, a resource to them. This is huge. I love the vendors. I always make it a point of when I go to a conference not to skirt the vendor area, not to just go through and grab the swag that they're sharing to take home to the kids, which I do, but at the end of the day, it's what can I be taking from this? I always go with two things. What can I come away with that would help me in my business? And what can I do that I can take back and help a client, one or more clients? If I can leave a conference having at least through those vendor interactions, something I can take back and implement in my business to make it better and help a client, I feel that experience has been worthwhile. So I go in with that intent.
That's a great point. And I've got to do some follow-up because some of the follow-up I'm doing, I still need to do is for my clients. Yeah. Absolutely. These light bulbs go off and go, oh, I know they're having this problem. This could solve it. Mm-hmm. Absolutely. Yep. Can I tell you one other part that was really great?
Yeah, please.
So what the other part that was really great was the award ceremony.
Hey!
Yeah. So that was a
Flip
really
that
nice
one around.
surprise.
Flip it around.
Oh, sorry,
Flip it around.
GrowCon.
There you go. There you
so
go.
there's no way the camera's picking this up. Maybe if I put it
There you go.
against
They'll
my
get
suit.
it. They'll get it. They'll get it.
Yeah. So this is a GrowCon award. I was blessed,
given,
fortunate,
yes.
given this award for out of the box. It's the out of the box award, and
Yes.
it was for the Cash is Clear Maximizer and the Cash is Clear Blueprint. So that was awesome.
Yes.
So thank you. I really appreciate it.
You're very, very welcome.
So,
Very deserving of
well,
it, by the way.
Thanks. And I'm going to put this aside, but let me tell you what else I got out of it.
Uh-huh.
Now, I would have gotten more. I'm not an accountant, and I'm not a tax preparer, etc. But boy, it was interesting seeing those people who were get these awards and going, okay, what are they doing? If I was there at the conference and I was doing tax prep, there's a woman, I can't remember her name, tall, red hair. She won Kim, and
was Kim.
she won 3 or 4 awards. I'd be going, what is she doing? Because she's got a market, and I'm somewhere else in the country, and I might as well learn from the best. And you get to find out who the best people are doing different things. It was great to see that.
Well, I think one of the things that's really powerful about the gala is it's one place within the profession that we're able to celebrate one another. It's a place where we're able to give the recognition that's deserved for the hard work that these people are putting in. It's one of my favorite parts of the event. GrowCon is fun. We make it entertaining. We eat a beautiful dinner, have a gala. It's just one of those things where we're able to just step aside from the business and celebrate the successes that individuals are having. Where else are they going to get that? Where else are they going to be celebrated for the things that they've done throughout the year or more to grow their business? And that's one of the things that I think the gala really accomplishes. So that's one of my favorites of it.
And one of the best parts about what you did is that you segmented. So if you're a one-person business that you're generating a couple $100,000 a year, there was a segment that's under 500,000, if I remember correctly.
For the startups, yeah.
For the startups. And it's like, that's great because that's the toughest part is getting past the startup. But then you had the 500 to $1 million, over $1 million. So you had these different segments and categories, if I'm remembering them correctly.
You're right.
So it was great. That was great that no matter where somebody is in their profession, there's an opportunity to be recognized and learn from the best people in that segment.
You know, there's another part that was also helpful, like your award. It was who's the best boss and the best culture. It's the fact that we're trying to celebrate different parts that aren't accounting related, because we're running businesses. And as business owners, there are different facets that we are obviously doing right, and let's point those out so everyone else can say, oh, I need to do better there. And that's one of the things that I think is helpful is in the gala, you're able to see, like you're saying, there's someone there I can emulate, I can follow them, I can reach out to them. And it's a small enough community that they're more than happy to share their insights of here's what we do, here's how we do this differently. And I absolutely love that about the gala as well. So this is a very good thing. I want to go to a personal side of things. This is something that I think is quite fun. So with regards to you, your wife was there. She's lovely. You're doing this as a business. What is your business affording you on a personal level? How has it benefited you, that entrepreneurial drive that you've had? How have you benefited from the sacrifices that you've made?
You know, Roger, the first thing people might jump to is financial, and financially it's good, it's great. But one of the reasons I wanted to focus in on a niche is I have this need intrinsically to create, and it has really helped me dig deep into a niche. And I write articles, I'm creating software, I'm creating masterminds, and I get general personal fulfillment out of it. Period. Now, it's great, and I love helping other people, period, also. But I find that, you know, the best job is the one that you have fun at. People will say, well, what's your hobby? Or they'll ask Lisa, what's David's hobby? It's like, he loves his business. He loves doing that stuff. I love doing a conversation like this. Why? A, I like you. We have great conversations. But I know that there's going to be people who are going to be watching this, and they're going to learn something. And to be able to help them intrinsically without any kind of reward, it's okay. Love it. It builds me up personally, emotionally, spiritually, and it's to some degree financially. I don't know that I'll ever be I'm not going to be a billionaire, I can tell you that. I don't really need to be or want to be.
Yeah.
This is fun. And if there's one thing I can suggest to people, if they're not having fun, they should try to figure out a way that they can have fun. That's our number one. We've got 5 goals this year, or 5 focuses. Fun is the first one this year. And we're doing everything to have fun.
What are you doing to have fun?
Well, for example, fitness. That's our second one. There's 6 F's. So fitness. We decided not to do anything that has to do with fitness that we're not enjoying. So we like going swimming. We like going for hikes. I don't like jogging. I don't, I like lifting weights. So whatever I'm doing, I'm enjoying it. So that's one.
So fun and fitness.
Fun and fitness. Focus.
Okay.
Because I've been pulled in all sorts of directions, and I said, no, I've got to focus in on I do 3 things, but really it's one thing at a time with 2 peripheral things, and then I go to the next and go to the next. So fitness, filter, which is related to focusing, which is saying no.
Okay.
Like it's a hard thing for me to do. There's lots of different things I like. So filter, and then follow through, which is related to focus. And I told you follow through for GrowCon. I still have to do that.
Yep.
And then the final one is foundation. We realized we had certain foundational things that we should have done a year or 2 ago. We just finished putting up our website. It was completely redone from scratch.
Wow.
On the front, our front page.
Yep.
And there's a couple of other things that are just foundational. A new ebook that we just created that I should have created a year or 2 ago. It just got finished 2 days ago, which I'd love to share later on with people. So foundation. So we have 6 F's this year.
So is she involved? Is Lisa involved with this?
Oh, yeah.
Okay.
Lisa's the vice president of business development and customer services.
Very good.
So she's getting more and more interaction. She actually now knows, and she's not an accountant. She does not know any of the technical parts.
Yeah.
She knows all the theory of cash flow. She starts all my articles now. We're in masterminds, and I'll ask a question, and she's on mute, and she'll be answering the question. And I've got chartered accountants and CPAs going, we don't know. So she's read every article. She's edited them all. It's great. We have a lot of fun working together.
I like fun. Fun is good. That's one of the things that I like. So I'm going to add now another one, which isn't F, but it's gratitude. What are you grateful for?
Well, I'm grateful to be here. I'm grateful that I had the chance to speak at GrowCon. But in general, I am grateful for just being able to do all the things I've been able to do. I feel like God has blessed me with a mind that just thinks a little bit differently than other people, and that I'm able to synthesize that and bring it out and be able to help people.
Very good. Trip. You went to Florida for us.
Yeah.
Do you guys have any trips on the calendar?
We have a semi-planned trip.
Okay.
Our daughter is expecting our
congratulations.
second. It'll be our first granddaughter and the first great-granddaughter in the family.
Oh, wow.
And so we'll be taking off for Austin probably before this is published. Lisa will be on the first plane out, and I'll get on the next plane that I can really fit. Yeah.
Well, congratulations. That is awesome. Yeah, and in Austin, that would be a great place to be. And I would expect that this has already happened by the time this gets published, because this will go out live weeks from now. So the next thing I want to focus on is just advice. If you had some advice for an accounting professional as it relates to cash flow, what would that be?
Practice on yourself, if possible. It's often the hardest thing to do, is just work with your own books, your own cash flow. I can do bookkeeping. I have a bookkeeper who does my books because I used to do it once a year. To do taxes, I run my business on cash flow on a week-to-week, month-by-month basis.
Yeah.
But the other thing is get help. If you really think you're going, okay, and this is not for everybody. Some accountants just want to do taxes. They just want to do bookkeeping. Great. But there's a certain number of clients, accountants out there who meet with clients and are frustrated they don't know how to help.
Yeah.
Everybody who I work with is fundamentally saying, David, I want to help my clients. I don't know how. And get some help. Join a program and learn how to help them not just model or manage their cash flow, but also the mental game is huge, and also how eventually to be able to maximize cash flow, and profits.
Excellent. Good advice. Good advice. You've brought up books a few times. If you had a personal and a business book that you would recommend, what would they be?
The personal one's easy.
Which one's that?
Dune.
Dune. All right.
I had a teacher who said, David, this quarter's class is going to be a waste of time for you in high school. It's an English teacher.
All right.
Go to the library, read Dune, and write a book report. So, I really appreciate that. Mr. Lawrence, thank you. But I just think the book is brilliant.
Are you liking the movies?
The movies are brilliant also.
Did you like
the 2023 and 24 versions? The older ones were not good.
Okay, so you like these new ones.
The new ones are brilliant.
Okay,
yes.
good.
They were good enough that I asked my wife. She's not a big science fiction fan. I wouldn't ask anybody to go see those other ones with me. So that's on the business side. The personal side. On the business side, it's a lot harder. But actually, the one that probably had the most impact on my life was the Babylon, the greatest salesman in the world.
Oh,
that's what it is.
Greatest salesman in the world, Ogmandino.
Ogmandino.
Yes.
Right, based in Babylon. For anybody who's read it and remembers a bit, it talks about the scrolls.
The scrolls, yep.
And reading them every day.
Yep, 3 times a day.
I actually did that.
Beautiful.
For the 10 or 12.
30 days.
For 30 days.
Yes.
But there's 10 scrolls.
10 scrolls.
I did it for 300 days. And it significantly impacted my thought process.
Amen, yes.
So that was so foundational that everything else I can say has influenced everything else.
That is such a beautiful book. One of the things that you don't realize when you read the book is it's designed that as you read, you're supposed to then do as he's doing,
yes.
reading the scrolls 3 times a day. And what you can do is just read through the scrolls and come to the end of the book, and it's a nice, quick, easy read.
Absolutely.
Beautiful story.
Yep.
But at the end of the day, the scrolls are what matter. And so you just go through the exercise he does, because that is the change.
Yeah.
It's the recipe, and it's phenomenal because it addresses so many parts of our human nature. And I couldn't agree with you more. That is a phenomenal book, and it is one I reference quite often.
And it was great. It was recommended to me by a guy who you would have thought, he lived a very humble life. The way he dressed, the way he spoke. This guy was a multimillionaire, and he just didn't act like I thought a multimillionaire was supposed to act at the time.
Yep.
He's the one who recommended it to me. And I'll forever thank, and he's no longer with us, Mel Ellingson. Thank you very much for the recommendation.
Yeah. So are you familiar with the book? This is years ago, The Millionaire Next Door.
Oh, that's a great one.
Yeah.
I have a treasure chest that I bought in Peru, and both of those books are in the treasure chest.
There you go.
Yes. Eye-opening.
Yeah.
Millionaire Next Door.
Yeah.
And that's another easy read. That's the interesting thing is it's really simple. That one's a lot more in-depth research and such, but at the end of the day, it's pretty easy.
But it's the idea of who's next door and what they're living. They're not living like you might have thought they would, which is, this glamorous lifestyle.
Oh, yeah.
Yeah.
During the downturn of 2006 through 12, the only people I know who lost their houses were the people up on the hill with the great big houses. The people who lived normal, and this is part of the book, is... it's not just about offense, how much you earn. It's also about defense, how much you keep. And we talked about cash reserves.
Yes.
Right? That's the defense. And it was brilliant. It's a great book.
Yeah. All right. What's a question that you thought I'd ask that I didn't ask?
Oh, my gosh. You've asked so many good questions. Well, what's my favorite movie? But we've already talked about that.
Yeah.
So I was prepared.
You were prepared for that.
I was. It was going to be Dune. Well, you haven't asked me if people want to talk to me, how to get a hold of me, but I can't think of any other ones.
All right. Well, if people want to get a hold of you, how do they get a hold of you?
Well, they can go to my website, at davidsafier.com, DAVIDSAFER.com. I'm sure it's going to be in the
It'll
notes.
be in the episode notes, yes.
Yeah, and there you can send me an email. It's david@davidsafier.com. Fill out a contact form and say, send me an email that way.
Yeah.
However you want to do that. that would be great. Just get in touch with me. I love talking to new people. I'm like those vendors at GrowCon. I just want to meet people. I want to see if I can help them in any way. It's not high pressure. If you got any questions at all, just let me know. I'd be glad to help.
Beautiful. Do you connect on LinkedIn at all?
Oh, I love connecting on LinkedIn.
Okay.
Yes, and I put out articles. I put out lots of tidbits. So please, it's easy to find me. Again, David Saphir. My slash is D Saphir, but there's only 2 of us in the whole world, and he's my older cousin, much older cousin. I don't think he's on LinkedIn.
Your cousin's David as well?
Yes.
Oh, my heavens sakes. Well, I can say that surprisingly enough, there are more Roger Knechts in the world than I thought. So when you Google yourself and you try to find out a little bit about you, all of a sudden I come to the realization that I'm not the only one. I mean, the last name is unique enough to think that somebody also chose the name Roger to go with it is fascinating. So yeah, I was kind of curious to do my own Google search.
Well, if you Google search me, David, it's me who pops up.
There you go. Well, good. I like that. All right, so here's what I'm going to do. I'm going to start wrapping things up, and as I do so, I'm going to come back to you for a closing thought. Okay?
Can I just say one other thing?
One other thing.
So CIC60.com. Cash is clear, so it's the initials, CIC60.com. I put together 24 cash flow strategies that you control, right? These are totally within your control, that if you're an accountant, you recommend them to your business that you work in, to the business owner, or if you have clients, you will look like a cash flow genius. Go ahead, CIC60.com, get a free download. It's an ebook, easy to read, easy to understand.
Perfect. My hope is to put that also in the episode description. And you mentioned this book that just got published, so perhaps what we can do is get that so that when this is actually released, it's also in the episode description. I'll twist his arms and make sure that we can perhaps offer that as well. So here's what I'd like to do as I wrap things up. First of all, there is a number of things in the episode description that you want to take advantage of. Clearly, what he just shared is his LinkedIn profile, his websites and so forth. Those will be there. But in addition to that, I'd like to encourage you to get a book that is called Your Strategic Accountant. It's an ebook that you can actually download and from online read the various things as an accounting professional you should be focusing on as it relates to the services you're offering. And in there, we do talk about cash flow. In addition, there's a book that is called Red to Black in 30 Days. It is a turnkey guide for accounting professionals to complement lots of the things that we've been discussing here so that you as an accounting professional can be one of those resources for your clients to help them get on top of the cash flow they're experiencing. So great resources. Go to the episode description and there you will find them. As a summary of our conversation, I really enjoyed our conversation as it began. I mean, you're in a clear position transitioning out of the corporate world into helping businesses as it relates to cash flow. We talk about the myths. We talked about moving from just managing it to maximizing it. We also addressed a variety of different strategies that can be utilized and talked about those in depth. The one thing I really appreciate was the emotional discussion that we had about cash, the fact that it is something that people can get emotionally tied up in. And you suggested that because of the emotions, working with someone outside of the business to get that perspective, because it can be hard or difficult to actually focus on things. So those summaries are some of the highlights that I have. Clearly Dune, I love the movie, so that was wonderful. The book recommendations, Og Mandino, phenomenal. The Greatest Salesman in the World, wonderful read. I would highly recommend it, not just because it's enjoyable and insightful, but because of the scrolls. They are life-changing. So wonderful recommendation there. Surprise recommendation, by the way. I didn't see that one coming. So excellent read. And then the last thing I'd like to point out as a summary is David's a great man. He came, spoke at our conference. I've known him for some time now. He's just someone that's genuine and, more importantly, very insightful as to the strategies he's offered. So I really appreciate you coming here to the show today. So closing thought, what do you have?
My closing thought is that people trust accountants. If you don't know how to help them, it's okay going to go forward, but find somebody who does. Because most companies at some point will need not just backward-looking reports, but will need help growing or getting through a soft spot in their business, and they trust you. And help them in some way, shape, or form. If you don't want to learn how to do that themselves, like I said earlier, it's okay, but find a network of people who can.
Excellent advice. You know, I agree. This is something that's fun, exciting. It's topics that I like to address with my clients. It's something that I feel I can help move the needle on. But at the end of the day, as an accounting profession, we need to understand that there are other individuals that we can have as associates that we can refer out. It's okay to say, I don't do that, or I'm not the expert, but I do know someone. And to have that phrase of I do know someone is hugely relieving to the client, because they're thinking, this is dealing with money. You're my accountant. I'm expecting that this is something you can help me with. And it's okay to say, well, that's not my expertise. I know someone else that does. That still gives them the relief, and they'll have the gratitude of working with you still, because again, you were the resource. You had the connection, and that's valuable. So wonderful advice. So here's what I'm going to do to wrap this up. Obviously, if you've not already subscribed to the podcast, please do so. Subscribe, set the notifications. We're going to be releasing episodes each and every week, having on the show experts as to what it relates to building the premier accounting firm in your area. As we're doing this, one of the things I want to encourage you to do is go to universalaccounting.com. It's there that you can find the podcast section wherein we have highlights. We've collected playlists for you to go and binge listen to a variety of topics that are perhaps more relevant to your situation today. Do so. Go binge listen those and work on the things that matter most to your business. In addition to that, I want to invite you to GrowCon. We spoke of GrowCon today. It was a phenomenal conversation. I loved how we tackled not only just the expert speaking from the stage, but the value of meeting with the peers and also the time with the vendors. Excellent talking points. Well, you need to register. Join us for GrowCon. You can actually go and register there on the site at universalaccounting.com. With GrowCon, get your ticket, join us. We'd love to have you there. Why? Because it's for accounting professionals, owners of bookkeeping, accounting, and tax businesses. Come and actually see what it is you can be doing to work on your business. The next thing I'd like to mention is these principles, all the others that we address here on the show. If you'd like to discuss them further, find out more what you can do, reach out to us. You can go to universalaccountingschool.com, or more importantly, give us a phone call at 801-265-3777. And always remember this, accounting success is universal. Take care, have a great day, and be safe out there.